Welcome to ECNTRADE Daily Video. Before we begin, it should be noted that any advice is of a general nature only and that your personal circumstances have not been taken into consideration.
Hello everyone, my name is Rob Clayton and thank you for joining me. Well, with the US session being absent in observance for Martin Luther Day, the market has staged a minor rebound in front of that level, which is still holding relatively well at 76.60. It is assessed, though, from the technical implications, there is further risk still towards that level or to the support, which is around that 76.60-65. I do anticipate that the market will fail again towards the top side and eventually take out the support level, which has held for a number of days, and look back towards the bottom side of the range around 75 cents. Now, there's one aspect I'd like to point out. When it comes to the US dollar, which measures the greenback strength against a basket of 6 major currencies, the dollar index, or the USDXY, is holding to an inverse head and shoulders. Now, we see a break above 90.80. This should see euro tumble further. Currently trading around 90.70 though, so 10 points away from the break or the neckline. We should see eventually a move to the downside and look towards that objective of 119.90 to 120. I do feel from a technical point that we still have the bears still have the advantage of taking the challenge lower and reassess from there. So the measured move from the break of the neckline on the inverse head and shoulders is roughly around about 140 to 50 points, which in terms with the euro weighted at 57.6 is still about 60 to 80 points. So that still gives us a handful of points to see as decline. Looking at the dollar yen, well, we're looking back towards the top side and now seeing the challenge around 104 with the downtrend slightly lower around 104.1045. Keep an eye, because if we do see a sustained break above this level, would ignite a move up towards 105 to 106, because I do anticipate there'll be a lot of stops above 104.45, because this downtrend goes back to as far as middle of last year. So no doubt if the market is still trading short, a break would see a further rally. Looking at sterling, well, the market has rejected the level of 135, but not quite out of the danger zone when it comes to the bear case. We may actually see another challenge towards the bottom side. Now, a break of 135 exposes the region of 133. Any advances should fail towards the region of around 136.5 to 137. Sterling yen is attempting to break out of this bearish sentiment after two negative candles. The bullish candle overnight still lacks momentum when it comes to the technicals and therefore should eventually see a fall towards 139. But we do need to see a break of 135 to ignite that downside move. But I still feel the evidence, what we're seeing from the technicals, still keeps high priority of the bearish case. Well, we did see a stab of 1,820 yesterday and got to a low of 08 before rebounding. We're not quite clear in terms of the bullish case being restored and therefore should see a move towards the top side of the range, eventually of around 45 to about 55 with 68 capping. I feel that the market break of this level, 1,820, should ignite further risk to the downside. And if we get a close under 20, I'm looking down towards 1,765. Wrapping up with oil, but the market was a little bit subdued yesterday with the US being out after the retreat from $54 a barrel. Still looks like we can get a possible move down. A move through 49.5 would give us a move to 44. There is a little bit of congestion here around this sort of 51 to 52, but I'd still feel that from the break of the RSI and the MACD breaking through the negative zero, that is, access will give us further indication to a bear case. Well, that wraps it for today. Thank you very much for joining me, and as always, look out for the intraday report, and I hope you enjoy the rest of the day.